And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And a bit of a bumpy ride yet again last week. We're going to take a look at some of the data that drove news. Of course, September, as we all know, can be a volatile period, and this month did not disappoint. Last week, we did not have a whole lot by way of big earnings. Costco was the only major company that I recall came out with numbers. So a lot of the other data did take on a little more import. First up, we did get relatively strong data with an upward revision to that Q2 GDP numbers. We also did see a decline in jobless claims. So the two of them did have a feel for investors that perhaps the economy was a little bit stronger than anticipated. However, another item that took shape last week is Fed Chair Powell, in his speech, did allude to the fact that he thought that equities were highly valued. And of course, that was a good reason for investors to pair holdings. And then as we progress throughout the week, of course, that core inflation data today. And good news there is the fact that it came in as expected. So it did help put back the percent of those that feel that we will see a rate cut at the next meeting. Now, next week, we will get key numbers by way of the September employment data. And also next week, September 30th, is that deadline for the government and a potential shutdown. And that does usually have a negative impact on the markets as well. So let's go ahead and take a look at where we closed for the week. And as usual, take a look beyond. And here we are with the daily price chart of the S&P 500. And you can see that we did pull back rather orderly, but we made it all the way down to this key 21-day simple moving average. And then today, with that 0.6% rally, we did close back above that 10-day simple moving average. So we have that near-term uptrend still in place with a positive RSI and a positive MACD. Now, as usual, we want to get a really good sense of what took place beneath the surface of the market. There's going to be diverging areas as far as those that fare well and those that do not. So we're looking at the 11 sectors in the S&P 500, a 2-month daily price chart view. And this view is by relative strength. And we can see energy sitting up here at the forefront. The group was up over 4%. A lot of this having to do with an increase in the price of oil, up about 5%. There were other factors as well that we will get into. Also, XLC sitting up here at the forefront, and technology. These areas have been strong, and they are remaining up here at the forefront, although last week, communication services net was down about 1.5%, and then tech was flat. So let's take a look at another group that outperformed last week. You can see the S&P 500 closed nominally higher. However, when we look at utilities, of note is that this group was up over 1.5% for the week. This is another area that we are going to get into. You can see that nice MACD crossover in positive territory, likewise with the RSI. Let's take a look as these other sectors as we move through. And interestingly, we did see a rally today in XLY, consumer discretionary, and I would argue a lot of that is due to Tesla, but there are some other areas that are beginning to potentially brighten up there. Now, of note too is we did see a nice move in industrials, and these areas that I am sharing with you are economically sensitive and interest rate sensitive. So today's inflation data did help those areas of the market. I'm going to share with you other areas as well. Staples continuing to decline, down over 2%. Defensive area of the markets, also consumer facing, but not faring well. Let's go ahead from here and take a look beneath these sectors at these sub-industry groupings. And the purpose here is to get even more refined as far as a view of the markets, have a really good sense of where that strength has been emanating from, where there may be new strength. First up, we're going to take a look at gold stocks, and they continue to trend higher. Of course, that declining interest rate backdrop is good for gold stocks, but there are other reasons as well for the group to continue to fare well. So it's up here at the forefront. Again, that 2-month daily price chart view on this page with that relative strength indicator descending order. So let's take a look. Semiconductors, very economically sensitive. You can see it pulled back to this 10-day simple moving average. The overall group did outperform, up a little over 1%. We're going to take a look at a couple of names in that space as well. Software stocks sitting up here still at the forefront. They did struggle, however, overall for the week. You can see that we pulled back below that 10-day simple moving average, but of note is that the RSI remained positive. This is the type of dynamic you want to key in on, particularly for individual stocks. If you are potentially nervous about holdings, we did see AI-related stocks pull back rather sharply, but you will want to keep your eye on these momentum indicators so that you don't get shaken out too early. Let's take a look at small caps. That's another area that fared pretty well today, up almost 1%. Again, another interest rate sensitive area that fares well in a declining rate environment. And we closed just at that 10-day simple moving average, but we can see that RSI still up here in positive territory. So generally a bullish bias for these small cap stocks. Moving through, we can also take a look at yields on that 10-year, and it's continuing to inch higher. We are sitting up here at that 4.18 level, so relatively still in good standing, but this is something you will want to keep an eye on because relative to last week, bond traders are in a mode where they are thinking that we could see interest rates continue to pick up here. So that will have a negative impact on select areas, particularly technology and some of these other sensitive areas I've been highlighting here today. Moving through, we can see home builders. It's been a very mixed area. The data coming out relative to that home construction space has not been great. A number of the companies reporting earnings are not seeing growth going forward. So net, it is not an area to overweight despite a sense of declining interest rates. Another area that we can look at here, and I'll expand a bit more upon this. This is Invesco Solar ETF. TAN is the ticker symbol, and it's sitting up here really quite nicely, and it has a lot to do with government policies that are continuing to come into play, supporting the move into some of these alternative energy names. So let's go ahead from here, and I did want to share with you one area in that energy space. So what we can do here with the sector summary on the front page of stockcharts.com. I'm going to go ahead and keep it at the cap weighted. And we are going to do what's called a sector drill down. And I want to share with you a view that's going to show you very quickly and accessibly the ranking of these sectors relative to their performance. And we can see I talked about energy, and actually it was up 4.8% for the week. But let's go ahead and drill down beyond just that energy view, because oftentimes people do think of oil stocks, investors, of course. And I did want to share with you that coal stocks are up here at the forefront. So I'm going to share with you a couple of names in the US coal space. And it has everything to do with the fact that Trump has argued for the delay of these coal mine closures and in using them for the needed electricity. and for nuclear power. So here we are with Core Natural Resources. The ticker symbol is CNR. And you can see we've come back above that 200-day simple moving average. We have that MACD now up here in positive territory. And likewise with that RSI. Of note from my work is that we did on Thursday experience a nice base breakout at about that 86 level. We did pull back from there, but net, it's sitting up here really quite nicely. Another whole name that we can take a look at here is Peabody, BTU, and this particular name has been on a run already. So we do have that RSI coming out of an overbought position down here at 75, but we are still overbought. It's more of note as it relates to these energy names outside of the direct oil play. We're also going to take a look at a couple of natural gas plays as well. In fact, let's go ahead and pivot there right now. Take a look at NFG, and this is Natural Fuel Gas Company. We can see we had that nice base breakout this week on heavy volume. We had that MACD black line up through the red and a bullish RSI. Another name that we can look at in the natural gas space, and we have seen natural gas prices increasing this month and other factors as well. So Atmos ATO is a ticker symbol here. A little bit of a sloppy back and fill price action, but we did have movement into the end of the week, which in turn pushed this MACD black line up through the red. So when we talk about energy of note, there are going to be areas outside of oil that are on the move. This is Spire SR, another nat gas play. A little bit longer of a base breakout was experienced earlier in the week. And you can see that the ascent has been taking place on very high volume. We had that black line up through the red on the MACD. So certainly vibrancy taking place there. We did see the U.S. Energy Department earlier this week cancel 13 billion in funds for green energy. So hence we are seeing this move into coal and these other areas. Let's take a look at utility. I talked about the energy space and in particular electricity in the utilities on the move higher. Here's that nice base breakout with XLU. Let's take a look at FE. This is an electrical energy stock, and you can see we had this flat base formation. I'll go ahead and mark this up to highlight what took place toward the end of this week. So here we are with FE with this nice back and fill flat base formation and a nice breakout in tandem with that base breakout on FE. We did get that black line up through the red, signaling a new uptrend. Another name that we can look at in the electricity energy space is NRG, and this is Energy Inc. And another stock that is very much poised for a potential base breakout, not quite as dynamic as FE, but certainly quite interesting looking. From here, I'm going to take us over to the Dow components, sort it by that relative strength indicator, and share with you some of the names that are really faring well and precisely why. So here we are with Intel, and I'm sure many of you are aware of the news with NVIDIA investing $5 billion to partner with the company in AI-related projects. We had that huge gap up. Now, this week, we did see not only a nice continuation rally, but also Apple. It has been rumored, not quite confirmed yet, that they too are investing $5 billion with Intel with an eye toward collaborative work. Another big, well-known name in the Dow Jones Industrial average is IBM, a nice stalwart old name. And you can see this big move that we've had here of late. And the reason for the advance is very well founded. The company did complete the first major quantum computing trial with HSBC, and it did fare well. It was all about using quantum computing to help the company with their bond trading outlook. And you can see that the favorable results did in fact push IBM higher. Let's go ahead and take a look at other names up here at the forefront. JP Morgan. A lot of these major banks are faring well, finding support above this upward trending 10-day simple moving average. The company will be reporting their earnings in a few weeks, but a lot of this has to do with the fact that investment banking activity, the capital markets division of these bigger banks, are seeing more activity. We're seeing merger activity, IPOs, and other fee-generating activity. Up here also at the forefront, Apple, their initial move here, all about their new product release. But what I did want to highlight, let's go ahead and pull up a weekly on Apple, and you can see that we are on the cusp of a 9-month base breakout. And those that are familiar with that base breakout formation concept will know the longer that base is preceding the breakout, historically, the longer your advance out of the base. And we need only come back to the mid period in 2024 and take a look at the sharp subsequent advance out of that base. So going back, looking at the Dow, there are a couple of other names that we can highlight. Caterpillar, of course, in that industrial space, it's going to benefit from the AI-related data center move, but also other construction infrastructure-related plays, and the stock is in a very confirmed uptrend. AXP, I want to highlight, this is American Express, and it's one of the few in that credit card space that is finding support above its 10-day simple moving average. And this is all about the fact that they focus on high net worth individuals, luxury goods, and that is an area that is generally going to be better able to withstand pressures from higher inflation, higher prices, and they also have a pretty high fee for their credit cards that's helping their bottom line. And we can take a look at another name that is also in that credit card space, but is not faring as well. And that is MasterCard. You can see the stock is now down below that 50-day simple moving average, negative RSI, that negative MACD crossover into negative territory, high volume on that selling. And a lot of this has to do with the fact that there are major corporations, Walmart among them, that are looking to introduce their own stable coin so that they don't have to pay the high 3% plus that these credit card processing companies charge. Visa is another example of a credit card company that is deteriorating down below that 50 and 200-day simple moving average. Let's go ahead back to these Dow components because I also want to highlight another area that's been picking up here of late, and that is defensive stocks, defense, Raytheon, RTX. You can see that gap up. We are seeing a lot of increased geopolitical strife. Certainly, Trump's turnaround in his stance toward Ukraine is one of those reasons. But net, if you go into defense names, you will see vibrancy. We have one of the leading names on my MEM Edge report. I would urge you to take a look at that. Let's go ahead down, take a look at some of these other weaker areas. And we can see Disney struggling a bit here below this 50-day simple moving average, negative RSI, and a negative MACD. As we move through, I talked about consumer staples not faring well. We have KO sitting here, and let's take a quick look at Nike, which continues to struggle down below that 50-day and seemingly finding support here at that 200, but net, we have a negative RSI and a negative MACD. Another area I wanted to share with you when looking at the markets in a way that could be an easy way to determine where the strength relative to the weakness may have taken place. This is VTV, and it is the Vanguard Value ETF, and you can see it sitting up there quite nicely. If we take a look at VUG, that is the Vanguard Growth, and this is that pullback, a number of the M7 names this week did not fare that well. So we are seeing a bit of a pullback in that growth relative to value, which is going to be related to those interest rate sensitive areas. Another big holding in VTV, that value ETF, is Berkshire Hathaway. And let's see if we can BRK and you can see that the stock is reinvigorated here. We're on the cusp of that black line up through the red, signaling a potential new uptrend. Another area that was on the move toward the end of the week, and this is again going to be all about regulatory issues that are coming into play that are helping the cryptocurrency space, which has been struggling a bit here. But we're looking at RIOT platforms, RIOT, sitting up here quite nicely, a positive RSI and a positive MACD. What I did want to highlight for you is the fact that Vanguard is exploring the possibility of offering access to crypto ETFs. So we've had that expansion into some of these larger asset management firms, but when Vanguard steps on board, then you know that it is an area of the markets that is gaining more by way of acceptance. And then last up, I did want to share with you again that some of these names that have been faring really quite well, which you're going to be on the lookout for, and this is IREN, an Australia Bitcoin related company. We can see it pulled back to this 10-day simple moving average, found support. So you will still, we're not out of the woods yet as far as a potential further pullback. If we do see that black line down through the red, that certainly would be concerning. But when looking at these names, you will want to have a system in place for that pullback. RMBS is a semiconductor stock on the MEM Edge report, pulled back below that 10-day simple moving average, but take a look, it closed the day above that 10-day. And then today, again, we did dip below that 10-day and buyers came in so that it closed back above that key moving average. And that is what you want to see to give you a sense that it is not quite over yet with these leading stocks. One other area that I did want to share with you is the fact that we are seeing some vibrancy in some of these healthcare names. By and large, it is not an area to overweight, but here we are with Johnson & Johnson for those that might want to diversify a bit out of, if you are overweight in, let's say, AI-related names. You can see that this did experience a nice base breakout this week. We're on the cusp for a potential MACD crossover, black line up through the red, and this potential base breakout is very warranted. The company did have multiple FDA approvals in September and strong clinical trials on their two medications for depression and insomnia. So we can see that the stock is setting up here really quite nicely. Lots of Wall Street upgrades this month as well. One last area I wanted to share with you is when you pull up charts and you are interested, for instance, in seeing do they offer a yield? Certainly a lot of the bigger pharmas, in fact, do. You can ask for that full quote. And then up here at the top, it will provide you with that information, a nice 2.9% yield for J&J. And that's it for this week. Everyone have a fantastic weekend. If you haven't already, go ahead and hit that subscribe button and you will be alerted to upcoming videos. Also, go ahead and hit that like button if you like what you've seen. And last up, as a bonus, there is a link below to receive a 2-week trial at no cost of my twice weekly MEM Edge report. You will want to stay on top of these markets, in particular, knowing how to handle your faster growing AI names, as well as the rotation that could be shaping up into other areas. Have a great weekend. I'll see you here next Friday.